Zimbabwe is facing the aftermath of one of the worst droughts that we've seen in about 4 decades. We've seen other countries get financing, and Zimbabwe has not been able to tap into that. I mean, what are the options for the country at this point?
Oh, well, Zimbabwe has relied mostly on domestic resources. We've learned to manage our affairs properly, live within our means. And it's showing. I think we've done rather well at that. Even with the worst drought in 40 years, the economy is still set to grow at plus 2%. You know, it's showing a lot of resilience. Partly it has to do with some of the prior investments we made in agriculture, around different water sector, around the dam construction. In fact, as I speak, with the worst drought in 40 years, we're going to have a bumper harvest for wheat. Yeah. Actually, we're going to be self-sufficient for wheat. We'll produce almost 600,000 metric tons of wheat. We'll actually be exporting wheat. So the Zimbabwe drought story is basically a maize story, as opposed to all the cereals that you see. So we are building resilience right across the economy, supporting farmers, make sure that they move towards drought-resistant seed. We have a whole program to deal with this climate change shock and build resilience.
Do you have any options to expand that, though? Because this is still a story where a lot of Zimbabweans are struggling, you know? You talk about living within your means. I mean, how do you do that if you're not able to even live?
We are getting some support, which limited, of course, from our well-wishers, other countries in terms of donations. We declared a disaster, so some monies have been coming in to support Zimbabwe in terms of cash transfers.
Where is that coming from?
I would say mainly Europe. That's where it's coming. European countries have been giving us aid to support the vulnerable. But also we took insurance as government. So we received a payout in terms of from ARC, which is an African institution, where we've insured vulnerable families in 22 districts which are most affected. So we're going to expand that insurance going forward. But also we managed to create more fiscal space by leaving some of the activities for the private sector to finance. So we're using all manner of strategies to make sure that we can maximize on the resources that we've got, which is not a lot of resources.
Who has been the most beneficial or supportive partner in Europe that you've found? And are you talking to them about debt for climate swap?
I would say it's the European Union as a bloc,
okay,
because they come in as a bloc. They've been very supportive. In the area of health, it's mainly been the U.S. is the largest donor in terms of health, because they run also the HIV AIDS programs under PEPFAR, so they tend to be the largest contributor in the health sector.
What about climate, though? I mean, have you been talking to any of these partners about the debt for climate swap ideas, and what has there been response been?
Oh, yes, we've been talking to various partners and also agencies. If you look at, for instance, IFAD, Japan and others, they've been investing in irrigation schemes, smallholder farm irrigation schemes, and those have gone a long way in mitigating the impact of the drought for smallholder farmers. But also investors have come in terms of investment in mini hydro systems, again to deal with the issue of power shortages and power outages due to the drought situation.
Oh. So you're not concerned then about the current situation in the economy and where the Zimbabwean economy is relative to the rest of the region even?
Oh, of course we have to remain concerned. I think what we've done a better job this time in responding to the drought than we did in 2019. 2019 we had a negative 7% rate of growth, and this year we're talking about a plus 2%. We've coped better, frankly, this time around. But the first order of business that we did was to just open up the borders, let anybody with free funds import food. As a result, you find that the shops in Zimbabwe are actually full of food. The only issue is affordability. That becomes the issue. So affordability, but not access to food. There's enough food going around that's available through the shops. But also I must thank the Zimbabweans in the diaspora. They remit about $2 billion into Zimbabwe per year.
Is that enough, though?
No, it's not about. Look, they support their families. What I'm saying is that also helps in terms of additional resources to support families. Those working outside, they're working in South Africa, in the UK, wherever. They send about, in fact, it's about 2.5 billion this year, and that really helps to show up families that are in need.
What more do you need, though, to correct some of the arrears that the economy is still dealing with? Because you mentioned a lot of investment that is coming in, but still the economy is not fully recovered.
The first order of business is arrears claims on what we owe as debt.
Yeah.
Debt to international financial institutions, World Bank, FDB, European Investment Bank, which is the preferred creditors. So the debt resolution issue is a very, very important issue. It's an albatross around the economy. Once we are able to clear that, then we'll unlock quite a bit of credit from outside, clear all the arrears, and banks also will feel more comfortable in extending more private credit. They're already beginning to do so, but they'll double, triple that, go 10 times that level if the arrears were clear in terms of our debt arrears.
So what else are you doing then to bring those arrears down? I mean, what is actually working?
Oh, we're doing a lot. We started a process which involves all the creditors, both IFRs as well as the bilateral creditors. In fact, as I speak, we're having a big meeting on the 25th of November of this month to basically move that conversation forward. We've set up a whole process which involves also the implementation of certain reforms around economic reforms, governance reforms, and reforms around land tenure, including the compensation for farm owners who lost their land during the economic reform program. We've agreed to compensate them, and we have a program for that compensation. We've done a lot in just building trust and credibility around the arrears clearance program.
Is there anything that they have asked of you that you are not able to do at this point in time?
Frankly, we've been able to meet most of the expectations. We think we'll meet all the expectations without difficulty. And I mean, it's a collaborative process. I mean, just bringing everybody together in terms of just bridging the trust gap and the trust deficit. That alone is a major, major achievement.
Interesting. I also want to ask about the ZiG. We've been paying close attention to the ZiG. We've seen it strengthening slightly against the dollar. I mean, is your expectation that this is actually going to continue?
Frankly, the fundamentals are strong. There's no reason why the currency shouldn't remain stable. The ZiG shouldn't remain stable. If you look at, for instance, just simple reserves argument. If you look at the quantum of reserves, this is about 13 billion ZiG worth of reserves. If you look at the ZiG in circulation, is 12 billion ZiG. I mean, where in the world do you find a country that has enough reserves to back its entire domestic currency in circulation? We have that in place. There's no reason for the currency to weaken. But we know why it weakens, because people take a position, a sentiment. There's also a history. There's also hysteresis, to use a complicated economics term. So really, but there's no reason. The fundamentals are strong. We have been very tough on the budget deficit front. In fact, as I speak, we expect our budget deficit to year end to be 1.4% of GDP. Show me many countries that are recording that level of, budget deficit. It's so low. That's a mark of fiscal discipline. We have positive real interest rates, so we have tough monetary policy. We have a current account surplus. For the 6th year running, we'll have a current account surplus, which means that the external balances are not a risk to the currency. So the fundamentals are strong.
Why is there not the same adoption, though, as, say, the U.S. dollar? I mean, there's still a majority of Zimbabweans that are using the U.S. dollar versus the ZiG.
Oh, look, we have allowed it. We have a multi-currency regime.
But doesn't that undermine the strength that the ZiG will eventually...
We are going into a very interesting argument, which is what's the impact of having strong currencies running alongside weaker currencies? Of course, it does then put pressure on the weaker currencies. You expect, it to be the case, because agents tend to want to save in the stronger currency and spend in the weaker currency. That's normal behavior when you have two competing currencies of various strengths. But our view has been that, look, there are key benefits from the multi-currency regime, that is de facto dual currency regime, and that because the dollar does allow investors to be able to use it for investment purposes, for savings purposes, preservation of value.
So you do not see a situation in which the ZiG becomes the sole currency for the country?
Oh, one day. One day it will be.
What is the timeline for that then?
Oh, it's like you can never
What's your hope,
pronounce policy on the hoof.
What's your hope, though? Because Zimbabwe has tried to do this quite a few times, not successfully. The ZiG now having a few days of strength, but, I mean, could it ever really become the sole currency?
Yes, one day it will.
When?
When the time is right. We have a roadmap for that. I cannot give you a timeline on that.
Give us a short, maybe in the near term, sort of what that goal is.
I cannot.
Okay, but you do see it happening.
Because you know why? Because it's easy for speculators to take positions and so forth. So we can never pronounce on the exact timing of that. But we have a roadmap. We've made it clear that one day it will become the sole currency. It is the domestic currency of the country. So why should it not be the sole currency, frankly?